Welcome back to Stock School Daily. Is NIO really on the path to a $1 trillion valuation? So let's just dive right into the evidence they lay out. And this quote from the CEO, William Lee, really gets to the heart of their entire vision. He says, being profitable for just 1 year is boring. We are building a dynasty. Now, according to the report, this is key. NIO isn't just focused on, a single profitable quarter or some short-term win. The goal is way bigger, building a long-lasting dynasty. And you're going to want to keep that word dynasty in your head as we go through this. Okay, so the first big pillar of the whole argument is this major production milestone. The report claims this isn't just a number, it's a fundamental shift in the entire story of the company. 1 million vehicles produced. I mean, think about that for a second. For years, the whole story around pure EV startups was just about survival, right? Can they even make it? Well, this milestone, the report claims, puts that whole question to rest for good. And this completely reframes the conversation. The old story was all about bankruptcy risk, about just trying to survive. But now, with 1 million cars out there on the road, the new story is about proven durability and, honestly, a move towards dominance. This isn't the finish line, not even close. The report sees this as the moment NIO officially steps onto the main stage. Okay, great. So they can build the cars. We've established that. But can they actually make money doing it? This brings us to the second pillar of the report's argument, the financial engine behind the whole operation. And here's the number that really matters. Their automotive gross margin is sitting comfortably above 20%. Now, what does that mean? It means their core business is fundamentally sound. For every car they sell, they're making a healthy profit. That's huge. And the report really singles out the company's financial discipline here. I mean, look at this. While their gross profit is growing by billions, they're keeping their operating costs tightly under control. That shows a company that knows how to scale and how to do it profitably. And this brings us right back to that dynasty idea we talked about. See, the report argues that NIO is making a very deliberate choice here. They could just bank those profits and make the quarterly reports look amazing, but instead, they're reinvesting that cash and heavily into R&D and infrastructure. These are the building blocks for that long-term vision. Now let's look at the future and what the report claims is a truly explosive growth trajectory. And here's the headline number that just jumps off the page. An official target of 40 to 50% annual growth. I mean, that is an incredibly ambitious goal. So the natural question is, how on earth could they fuel that kind of expansion? The report digs right into it. Well, the first piece of fuel is just this massive market tailwind. Projections are showing that by 2030, new energy vehicles, we're talking EVs, hybrids, the whole shebang, will make up a staggering 90% of the car market in China. And NIO is positioned smack dab in the center of this enormous wave. And hey, if you think that 90% number sounds a little out there, the report points to what it calls a crystal ball, Norway. Get this, the market there is already at 98% NEV penetration. So this isn't some theoretical future we're talking about. It's a present-day reality happening right now, showing us exactly where the rest of the world is probably headed. But it's not just about riding a market wave. The report identifies 3 specific secret weapons, if you will. First up, the Firefly brand is ready to go global, specifically targeting right-hand drive markets. Second, their 5th-generation battery swap stations are prepped for a mass rollout. And third, there's this new retail strategy called Sky Stores that's designed to integrate all their brands and slash costs. Pretty smart. Okay, now for the final and, maybe the most important part of this whole bullish case. We're talking about the long-term competitive advantage, the moat, as they say, that the report claims sets NIO apart from everyone else. So to really get this moat, you first have to understand this fundamental problem with almost every other EV out there. A car's body is designed to last, maybe 15 years, but the battery, not so much. The report calls this the ticking clock of EV ownership. After about 8 years, that battery's health can seriously degrade, which hammers the car's value and can even raise safety concerns. So what's NIO's answer to this ticking clock? It's something the report calls battery decoupling. And it's a really simple but honestly profound idea. Just separate the ownership of the car from the ownership of the battery. The battery stops being a part you own and becomes a service you use, one you can swap, upgrade, and maintain forever. And this contrast really just highlights 2 completely different mindsets, right? On one hand, you have companies selling a product with that ticking clock, where the battery is basically a liability waiting to happen. On the other hand, NIO has created what the report calls a forever business, where the battery is a service, not a problem, and that, the report argues, is the ultimate long-term advantage.
Let's move on technicals.
The stock closed at $4.64.5. But honestly, the number itself is only part of it. The really important detail here is that this price is right near the lowest point of the entire trading day. That's a classic signal that the sellers, what traders call the bears, were totally in control, right up to the final bell. So this isn't just about one bad day, it's part of a bigger pattern. Analysts have a term for this. They call it a confirmed downtrend. That's just a technical way of saying the overall momentum is negative, and the stock's immediate future is looking pretty fragile. It's kind of like trying to swim against a really strong current. And wow, this chart right here just illustrates the point perfectly. See the bar on the left? That's NIO's current price. Now, compare that to the two bars on the right, the 50-day and 200-day moving averages. Just think of those as the stock's average price over the last couple of months and the last year. The fact that the current price is way, way lower than both of those averages, that's a huge red flag for traders. And it just confirms that powerful downward trend we were talking about. Okay, so we've established the situation is tough. Here is where we map out the actual battlefield for NIO. Just look at this table. Our current price is literally sandwiched between these key levels. Right below us, we have an immediate floor or support at 462, and a more critical floor below that at 450. Then, if we look up, the immediate ceiling or resistance is at 475, with a much bigger one at 508. These specific numbers aren't random at all. They are the triggers for our entire game plan. So, with those levels clearly defined, we can build our first scenario, the bullish path. This is the playbook for what happens if the buyers, the bulls, actually manage to wrestle control back. It's all about a simple if-then strategy. If the stock can hold itself above that 465 level and then break through that ceiling at 475, that's the trigger. That's what tells a bullish trader, okay, we've got momentum now. The plan then sets very specific targets. First, a move to 485, and then the ultimate goal, which is testing that major resistance level we saw before up at 508. See? It's a clear, actionable plan. No guesswork. But what if that doesn't happen? A good analyst is never just a cheerleader. They are a strategist. And that means they have an equally detailed plan for the exact opposite outcome, the bearish path, which is what happens if the sellers stay in charge. And this is just the mirror image of the bullish plan. If the stock tries to go up, gets rejected at that ceiling, and then falls right through the floor at 462, that's the bearish trigger. A break with significant volume, which just means a lot of people are selling all at once, is the signal of serious weakness. The plan then tells you what to expect next, for the price to fall toward the next support levels, those psychological floors at 450 and maybe even 442.
Thanks for watching. If you found this helpful, hit that like button and subscribe for more.